If you own a condo in South Florida and you're thinking about selling in the next 6 to 12 months, this is an important update. Beginning in August 2026, Fannie Mae is making changes to the way condo buildings are reviewed for financing. And depending on how well your association is funded and managed, these changes could affect how easily buyers can obtain financing for units in your building. And when financing becomes more difficult, the pool of qualified buyers can shrink. When that happens, properties often take longer to sell and values can come under pressure. According to a recent article from Florida Realtors, one of the biggest changes is the elimination of the streamlined review process that many condo buildings previously qualified for. In the past, some established buildings could go through a simpler review. Beginning in August 2026, lenders are expected to perform a more detailed review of virtually every condo project. That means they will be looking closely at your association's budget, reserve funding, insurance coverage, special assessments, litigation, deferred maintenance, and overall financial condition. In other words, buyers are no longer being evaluated solely on their credit and income. The building itself is being scrutinized just as carefully. Another important change involves reserve funding. Many associations have historically budgeted at least 10% of their annual operating budget toward reserves. Beginning in 2027, that benchmark is expected to increase to approximately 15%. For some communities, this may require higher monthly condo fees to build stronger reserves. For others, it may simply confirm that the association is already well funded. The goal is to ensure buildings have sufficient funds set aside for major repairs and replacements, rather than relying on special assessments. For well-managed buildings with healthy reserves, adequate insurance, and no major issues, these changes may have little impact. In fact, strong buildings may become even more attractive to buyers and lenders. But for buildings with underfunded reserves, significant deferred maintenance, or large pending assessments, financing could become more difficult. And if buyers cannot obtain financing, the pool of potential purchasers becomes smaller. That can lead to longer marketing times and downward pressure on values. This does not mean every condo in South Florida is going to be affected the same way. Every building is different. Some communities are financially strong and should continue to attract finance buyers without issue. Others may face additional scrutiny. There is also some positive news. Certain regulatory hurdles are being reduced, and some buildings may actually benefit from the updated guidelines. So this is not universally negative. The real issue is understanding how your specific building compares. If you own a condo, this is a good time to review your association's financial statements, reserve study, insurance coverage, and any planned assessments. If you are considering selling in the next year or two, understanding how lenders and buyers may view your building is more important than ever. And if you are buying, remember that the building you choose is just as important as the unit itself. A beautiful condo in a financially weak building can create financing problems and affect resale value down the road. If you'd like to discuss how these changes may affect your building and what your condo may be worth in today's market, feel free to reach out. And if you find videos like this helpful, subscribe to the channel for weekly updates on the South Florida real estate market.